Jorge, it's a pleasure to get to meet you. I love the glasses. I hope that one day I am at half as stylish as you are. If you wouldn't mind, please give an introduction to yourself. Feel free to brag. Tell me where you're at right now, a little bit about your origin story, and then we'll talk about kind of COREangels in just a little bit. But tell me about the backstory. Where are you from? What you doing?
Okay, well, right now I am the managing director and the co-founder of COREangels EnterpriseTech. We'll talk about that later, but just to give a little intro, it's a micro VC fund focused on MarTech, SalesTech, and AdTech, which at the end of the day is like new technologies around the customer. Okay, we'll get there later. My background, well, I have a profile that comes from the consulting. I spent my first 10 years in Accenture and McKinsey. I also went to banking for 17 years while I was doing my first investments as a business angel. So then at the end of the day, I quit banking because I wanted a better reason to wake up every morning. And I found it like investing in startups is something absolutely amazing because it has some of the ingredients that I love the most, technology, business strategy, finance, and people, so what else can you ask for? So that's why that's what I'm here today.
That's that's the phrase I use way too often. Like, what else can I ask for? So, I love it. Before we get into COREangels, what's your philosophy on? Actually, this kind of goes into it. Well, I'll ask this in a little bit. Tell me about COREangels. How did it start? Where did the idea come from? Is it just you? Do you have a team?
I will explain you. The fund is COREangels EnterpriseTech. COREangels EnterpriseTech is like a part of let's call like a family of COREangels, which basically is a group of business angels that one day develop like a methodology, about for bringing new investors and launching investment groups. Okay, it's like a franchise type of thing. Okay.
Okay, so there's COREangels and EnterpriseTech.
Yeah, they don't like me calling it that way, but at the end of the day, that's basically what it is. Okay, and then what you do is that you have your own investment thesis, and then you have your own investors, then you have your results, your startup, your portfolio. So you're absolutely independent. However, you leverage a little bit on them to start. So I would recommend it for people to launch their first fund. Like in my case, for example, like when I will launch the second one, I will do that on my own. But I think for the first fund managers, I think makes sense. Well, the story of our investment thesis comes when I went to Stanford for VC Unlocked. VC Unlocked, I think, is one of the top programs for venture capital for emerging managers. And basically, one of the things that we learned there, it is that your investment thesis has to be something that you believe is really going to grow on the first hand. On the other one, it should be a space that you are familiar, you are an expert at. Okay, so in my case, basically, I had two options. One, because of my finance background, I could launch another fintech, but there were like many in the market. On the other hand, I had a background on marketing, customer experience, and all that stuff. And then I did a small analysis, checking whether there were successful companies in that field, marketing, sales, technologies, and I found out that there were like plenty of nice opportunities to invest, but there was no VC fund focus on that. The same way that there, like some years ago, there were no VC funds focused on, I don't know, like e-commerce or like in marketplaces or blockchain. And nowadays you could find those ones because we're going more through a specialization. Yeah, in that case, I found out that there were no international VCs investing in marketing and sales and ad technologies, so I decided to focus on that investment thesis. And I have to be honest, we were very lucky because AI is disrupting absolutely this field. So all the solutions that were at the beginning when I was thinking about doing the investment fund, now basically those solutions are obsolete, and now there are new ones coming in. So we are at the great moment because now corporates and SMEs are investing like hell, in new solutions that could help them to identify, acquire, retain, and engage customers in order to improve their P&L. So I think it was a good decision to be very focused. But also, we've been lucky because, the trends have pushed us all the way up.
Definitely. I think there's definitely the major trend of some people call it like AI investing, but I think AI is too broad of a term, where I think every industry now, ag tech, marketing tech, sales tech, like all of it is going to be forced to have some sort of AI component. So I think it's more, I'm investing in enterprise tech, and they all will have an AI component to them regardless. Now it's just who's the best operator, what's the best team.
Yeah, but I absolutely agree with you. But you have to take into account when you analyze opportunities, whether they have any entry barriers from the technology perspective. Okay, I see plenty of startups. They have like a small layer on top of, I don't know, ChatGPT. Basically, that doesn't go anywhere, and then they sell this AI embedded, But at the end of the day, it is just calling to an agent that is already developed, and anybody could do the same thing like some couple of months later. So though they all have some AI component inside, you have to really analyze and understand whether the component is an entry barrier for newcomers or for competitors. That is the key thing.
Great differentiator.
Yeah.
Tell me more about your philosophy on investing. Are you very much a passive or very hands-on investor with your startups in your cohort?
Okay, I'll tell you a little bit where we invest. I always say that I believe I'm a smart guy, but I'm not as smart as others that they invest in PowerPoint. Okay, so I need the companies to have a little bit of revenue, so some small product market fit. So I know that whatever they are selling, it has some demand. Okay, and then from their perspective, we believe that smart money is a must. When you invest, it is like when you are trying to find a girl, to go out with, and then you go to a ball or you go to a dance. I'm sure, you could dance with any, I mean, you could check, and maybe there will be a girl that would like to dance with you. But if you want to dance with the queen of the prom, you have to offer something. So that is the way I see the startups. I don't want to invest in a startup. I want to invest in the best startup that I find. And in that case, a startup is the one that chooses. It's not me. So that's why I need to have a unique selling proposition also for the startups. And part of that unique selling proposition is that we support them and that we are the only ones that are knowledgeable in that field we were talking about, marketing and sales and that technologies. Founders feel very comfortable. First thing that I do is that I don't tell them, pitch me. It is like, first I introduce myself, like for 5 minutes. I explain them what I want, who I am, what they could expect from me and all that stuff. And then we have a conversation about their business, about their business model, about their go-to-market strategy, about the unique selling proposition. And there comes a conversation where then we feel like we want to keep on seeing each other. Again, this is like a type of like a relationship, Yeah. So that's my philosophy. That's the way I see it. I also like investing in quotes coachable founders. Those guys that are so smart, they don't need to talk to anybody. They believe they know it right. Their mother tell them that they're very smart and all that stuff. Is not the type of profile that we like. As you know, for example, in the United States, marriage lasts an average of 7 years. Okay, so, and also that's basically the period that a VC stays with a startup. Nowadays it used to be like 5 years. Now we're going almost up to 7 years. So when you are selecting a startup, it is like you are selecting a partner you're going to stay for the next 5 to 7 years. So you have to be sure that founder is the type of guy you would like to work for some years. And if things don't go right, it is also somebody honest, that you could find an exit or you could find a solution with. So that's why I invest in coachable founders.
That's a really good point that you make. One thing we talk about with the founders, that I work with, are not every dollar from an investor is the same.
No way.
Some are just $1. Some give you way more value in the connections that they can provide you and the network that they bring with them, and that's way more worth the check of $100,000, $500,000, whatever it is. It goes way further if you can help close a bigger deal. But you bring up a really good point in the relationship. You compare it to marriage, which honestly, same thing. The co-founder marriage, or the co-founder, partnership, very much like a marriage. You need to be careful with who you choose, but also your investors who you're going to be talking to. probably weekly or monthly, for years. It really is, who do you want to be, excuse the phrase, in bed with for the next year?
Absolutely. Yeah. And they could help you, investors could help you bring in other investors. They could help you also supporting you in double checking the strategy of product market fit, other things. Other investors, we don't, but other investors could even help you to find other people for your team. They can also help you opening new doors for new customers. I mean, there's plenty of support that you could get. And it's not just the funding. What happened is that you as a founder, you feel like you need the money. So it feels like, I need to cover this to feel relief. So because I know then that my bank account is full. So then now I could breathe and do what I want to do. But the path is pretty long. So you could go on your own. Like there's like a Chinese quote, you go on your own, you go quick. You go with somebody, you'll go farther. That is the thing. So this is a long run story. So you better find the right partner. This is a partner, absolutely. Yeah.
I love it. So for EnterpriseTech, because you're based in Spain, can you only invest in Spain startups, or can you go international? What's the limits on that?
That is something also that I thought it was very interesting. First, you need to have a very clear investment thesis, very specific, so you become a master of that. Nowadays, it is impossible to know about AI, blockchain, e-commerce, marketplaces, fintech, health tech, edutech, female tech or femtech, whatever. It's impossible. So you need to be focused. But something also very interesting that I found it is that United States is very big, but for other countries that are smaller, investors tend to just invest locally, sometimes because they have subsidies or grants from the government. And the problem it is that if you want to find the best of a specific category, does not make any sense that you focus on just on local founders. Okay, so what we do is that we invest. But on the other hand, if you are not a big VC, you cannot invest in Melbourne, in Singapore, in London, in Brazil, in US. It is impossible because you need to develop some network, you need to develop some sources of deal flow, you need to have also a flavor of the quality of the founders and everything. And also you have the time differences, which at the end of the day, that affects. So what we do is that we invest in Europe, so EU plus UK, all right? So all Europe. And we also invest in North America, mainly US. Europe, because we are here and, we believe these opportunities, many of them, they have not been value, and we are the only experts here. So we realize that sometimes generalist VCs do not have the knowledge to understand the value that is behind it. And of course, we cannot invest in marketing technology, sales technology without being in the US. There's great opportunities and deal flow. So we also invest in US. But then what we did is that we set like North America as a global. But to be honest, we have invested right now, for example, we have UK, US, Finland, Spain, Germany, Switzerland, Portugal. That's basically where we are investing. We are checking now one company in Canada, for example, but we are not touching LATAM, which it would be very like the first thought that we being from Spain, we would invest in LATAM, but we understand that we need to focus, and Europe and US sounds like a more advanced in this field where we're investing.
Yeah, and those are huge, geographies by themselves.
Yeah.
Yeah, that's more than enough to keep you busy.
Yeah, at the end, the only thing you need to check is that you have, with this geographical scope, that you have enough deal flow, quality deal flow for that, and we do. So in case we didn't, then we would have to, have a wider geographical scope, but we do have enough.
And that's one thing that I just thought about yesterday. So Global Entrepreneurship Network and Startup Genome, they put out a big report once a year. And, I was reading about Malaysia, and it's a mostly Muslim country. And this is just as an example. There are certain Sharia laws that require how you handle money and how you handle finance and fintech. So I was reading about one startup over there that they are the #1 Sharia like certified fintech startup over there. So one thing that I don't think a lot of people take into account is when you're going to these different countries and they have different customs and different laws, that fintech in Spain means something very different than fintech in Malaysia, means something very different than fintech in, I was talking to somebody from Nigeria this morning, and it's a very different, same like field, same sector, but very different uses. And, I think it might lead more into like the blockchain, more how to transfer money between countries in Europe versus let's make sure that we're keeping the laws in Malaysia.
Or in Nigeria, maybe it is about making banking accessible to all the population, because the penetration of banking is, I don't know, I'm gonna make a guess, but I guess will not be over 30%, okay, 40%. So maybe the solutions are more about making banking available for all population. So you are like solving absolutely different problems. And also the level of complexity, it changes a lot because of the regulation and also because of the maturity of the market. Okay. So maybe with a very simple product, maybe in this case in Nigeria, you could have a great success. Maybe if you are talking about the stage, product has to be absolutely different or more complex or differential, or I don't know. So the market makes a lot of difference. So if you are focusing on countries that are developed in a very different way, I guess that is also difficult to evaluate. One thing, for example, we don't do is that we don't invest in geographies that have lower valuation when the opportunity, it is just a replication of a success in a Western country. Let's suppose, for example, I don't know, like a company in Poland, all right, that is replicating a model that has been so successful in the States. Well, we don't do that because we want companies that they always have something differential and disruptive on their own, and that could be scalable, okay? Because if you start copying models, at the end of the day, I mean, first, it's not fun because it has already be invented, and second, then you need to guess whether that model is going to be successful in a geography that you do not know deeply because you don't live there, you haven't worked there. So it is more difficult. That's why we also try to avoid those type of companies. On the other hand, something that we are seeing now a lot, it is companies that have founders and team in different geographies. For example, we invested in an American company. The guy is American, but he lives in Vienna, in Austria. Then the CTO is the other founder, and that other founder is in Nigeria because he's a very expert professor in blockchain in this case, and that's where they also have the development hub. We also have a company in London, but the two founders, one is in Italy, the other one is in Barcelona in Spain. We also have invested in a Swiss company that is in Switzerland, founders are in Switzerland, but the development team is in Valencia, in southern Spain. So what we are seeing is that the way you need to optimize the resources from investors sometimes is to have teams in different parts of the world where it's more efficient.
Yeah. No, that actually perfectly leads me into my next point of what are some of the trends that you're seeing amongst these founders. So with those examples that you gave, are most of them incorporated in London, in the US, where?
Well, this is what happened. Founders know that if you have a company in UK, let's suppose a SaaS company. Let's suppose the company has some revenues and then the valuation in Spain could be, I don't know, 3 million. Same company, you have it in UK, but then that would be 5 million. Okay, if that company you have it in the US, in Delaware, it is, I don't know, 8 million. But if it's in Silicon Valley, then it's 10 million. Okay, that's the thing. So and also you have more chances of fundraising because, for example, the US is more developed or UK is more developed than Spain in this case. So that is the reason why sometimes the company is located in a place maybe where the team is maybe not where the team is, but it is just because of this reason. Sometimes or they have a big customer or a big accelerator that tell them, you could have this grant, or you could have this advantage if you are located here. So sometimes the location of the company is not where the team is. And then you have the next thing. It is about the programmers, the developers, because you need to optimize the resources that you have. You need to find a place where you are gonna find developers that can develop something half of the cost. For example, we also find American companies that are founded by Indians, and then their development hub is in India, which is like less than half of the cost. So they are able to have an MVP much faster and much cheaper than if all team were, I don't know, in Silicon Valley, for example. Okay, so
it's a great point. I think I've brought this up before on a previous episode, but Peter Thiel brought up how, he didn't like how he was having to invest so much money in these startups in Silicon Valley, because he knew half of it was just going towards paying rent in Silicon Valley because it was so expensive there. So what a lot of these startups, especially, like, it started before COVID, but then COVID really shot it through the roof, is they would go to Silicon Valley, raise their money, and then move the team of like 10 people to Thailand or Vietnam or Puerto Rico, because flying a whole team of people and renting, a place together there was cheaper than just living in California. And the taxes were less too. So that helps. But
absolutely, you need to raise just to pay the rent of the founders, as you say. And also, if you need to hire like an engineer or something, prices are, I don't know, 4 or 5 times what you pay for them in India. So
yeah,
the only thing is that you need to be able to control and manage those programmers in India. So if you don't have the culture and you don't know them, forget about it. So it is important that when you do that, you have some knowledge on the land or geography where you have, in case of the developers, where you need somebody there to know the culture and know how to select them properly. If we're just talking about different members of the founding founding team, well, then that's just a remote approach. But again, that's what we're seeing, and that makes a life of founders better because they choose where they live, and also it is more efficient for the startup because resources are cheaper. Yeah.
Perfect. Talk to me about one piece of advice if you had to give to every one of your early stage founders. I work with a lot of early stage and first time founders. What's kind of a common mistake that a lot of them can easily avoid, in your opinion?
Okay, sometimes they are designing and developing a company to be fundraised, and I mean, it sounds silly, but you make a business to earn money and to get customers. Okay, so don't follow like all the instructions, all the advices of all the investors, or people tell you what you need to do to show it to an investor. The investor is going to assess that your business makes sense. So don't forget that the key here is your customer. It's not your investor. I'm not telling you not to listen to your investor. What I'm telling you, it is that don't forget that the only way to make money, to make your company successful, it is to sell, and it is to get new customers and focus and design your company pointing or aiming at your customer. It sounds very silly, but sometimes this type of thing happen. And also always watch your cash flow. I mean, I know it's not basic advice, but most of the companies they just have problems with their cash flow because they don't follow it, they don't monitor the cash flow, they don't estimate it, and at the end of the day, they may have a good product, but if they don't check the cash flow, they die. And also test your product very early. Again, that's a very basic advice, I know it, but okay, always your mother tells you that you're very nice and you're very smart, so your idea, you believe it's going to be a killer idea and you're going to just break it. Okay, be humble, listen, check with real customers as soon as possible, be open to pivot, or be open to change or adapt or fine tune, and look for product market fit as early as possible.
Love it. Test your product, get it in their hands, make sure it works. We like to use the book, The Mom Test, which is such a great book. It's a super short book on, I love your example of your mom's going to love it, because that book starts off with an example of, don't show your product to your mom, she will love it. It's a good example, but it's like, here's how to ask better questions of like, instead of asking, hey mom, if I built this cookbook app, would you use it? She's like, of course I would. Like, she would never use it. Like, the better question is, hey mom, how do you use your iPad? And it's like, I read the news on it and like watch videos. And like, okay, when was the last time you opened up a cookbook? Years. Like, gotcha. Your mom's never going to use that cookbook app. So it's
that brings another point very relevant. Again, very basic, which is your ICP, your ideal customer profile. Keep on working on that. Find out who is your real ICP, the one that is going to be willing to pay you for the service that you're providing, or the software or whatever you're providing. Sometimes the ICP is designed like a very high level, or we're going to do this B2B or maybe B2C. We're going to go for corporates, but this is also applicable for SMEs. It's like, no, I mean, and also that brings another advice is at the beginning, you have to focus. Okay. So understand your ICP. Maybe your product is applicable for 10 different industries, but focus on which one makes more sense for them. Find your ICP, could be SMEs, could be some type of individuals, could be corporates. Try to understand them and then test the product with them. And once you do that, you get more money. Maybe you want to do another version or something for other customers, but be sure you know who your customer is and double check the product market fit as soon as possible with that ICP.
Perfect. Jorge, thank you so much for talking today. Where can people find out more about you, keep up with what you're doing at EnterpriseTech? Where can we find you?
Where can you find me?
Yep.
Well, LinkedIn.
Perfect. I'll put your LinkedIn in the description later so people can follow you there and see more of what you guys are investing in and hopefully cheer on your great success.
Okay. In fact, we are about to close an investment. I guess I could share it with an American company that they are in a very interesting field. They are in the video commerce, which is basically they are optimizing the ratios in TikTok Shop and YouTube Shopping, which are going to be the future commerce channels for all of us. Okay, so and that in this case is an American company. So very soon maybe next week I will publish that when it's everything official. I publish it in LinkedIn, so you can see me there. Okay.
Okay. So are they working more with like the TikTok creators or the shop owners?
Well, their customer are brands. Okay, that they help brands through TikTok influencers create content, and they are able through AI to analyze what content is becoming more successful, and that way what they do is that then they focus all the paying ads into those successful creations, and that increments their ROA. You know, the return on the investment on ads.
On ad spend.
Yeah, on advertisement. That's basically what they are doing. And the thing is that now US and Asia are like the main focus on this emerging business, but it seems like Europe is also gonna come later. And sooner or later, you know, because of all these influencers impact, we are gonna be buying through videos, and so that's one of the things where we're investing nowadays.
Are you seeing a lot more of like the investment worthy startups going towards the social media aim, or
what do you mean? Sorry?
I guess this kind of goes back to the previous question of like trends that you're seeing.
Okay.
A lot of the marketing and sales startups are a lot of them more social media focused, or
we have I'll tell you some trends that we have. We have a lot of startups in voice agents, you know, like to communicate with customers. That's a big one. Bots were at the beginning. Now it's more about voice agents. Now we have also a lot of startups on the field of using generative AI to create content. Okay, to create content for social media, create content for website, to create content that fits into your brand and all that stuff. We have now other block of companies, sales outbound, a lot of everything related to sales, identification of potential customers, creation of the communication. We also have software that helps your sales team to optimize the relationship according to the videos of the remote meetings that they have with customers. We also have customer identification, like behavioral blueprints and identification of people through the way they behave. There's plenty. There are some there are some niches there like emerging, very interesting. All of that.
That's all. Yeah, my background's a lot in sales, so I think it's very easy for a lot of people to, think of sales and think of, me calling you to like sell you a quick product, and then that's the end of it. But it's like there is follow-up, there is relationship management, there is optimization of like finding the right targets. So there's so many, if you've ever worked in the sales department, which I know you have, there's so many different like layers to it and like pieces to the puzzle to securing a deal that I think most people don't realize. So it's really cool to hear these different.
And also there is another bunch of companies working on the product definition. Okay. Now you could get AI to tell you exactly what are the trends, what your competitors are doing, how you make your product different. They also have they replicate your ICP. Okay, so you could ask your ICP if they like the shoes longer, shorter, blue, red, or whatever. So that agent that replicates your ICP could tell you exactly what he or she likes doing it. So everything about product definition and launch is also being disrupted right now.
Crazy times. I'm excited to see them all. I want to check them out. But thank you so much, Jorge. I appreciate the time today. It's been a pleasure to get to talk to you, and hope we get to do it again sometime. Hopefully in Spain in person. I'll let you know.
Anytime. I'll get you a coffee. I was gonna say a beer, but I don't know whether you drink beer. Let's go for a coffee. Okay.
Very, very much a big beer drinker.
Thank you very much for the invitation. It's a pleasure. Thank you.
Talk to you later.
Bye.